Welcome to our channel. If you want to reduce your tax bill with strategic year-end planning, follow these step-by-step instructions to implement moves before December 31st. Step 1. Review your income and deductions for the current year by November to identify opportunities for reducing taxable income or accelerating deductions. Step 2. Maximize retirement contributions before year-end. Contribute to 401k plans by December 31st or fund IRAs by the tax filing deadline. Step 3. Harvest tax losses by selling underperforming investments to offset capital gains, reducing your tax liability while rebalancing your portfolio. Step 4. Accelerate deductible expenses into the current year by prepaying state estimated taxes, property taxes, and qualified business expenses if you itemize deductions. Step 5. Make charitable contributions before year-end. Consider donating appreciated stock or using a donor-advised fund for larger tax benefits. Step 6. Review and adjust income recognition if you have control over timing. Defer bonuses or invoice payments into next year if beneficial. Step 7. Use flexible spending account balances before they expire. Many FSAs have use it or lose it rules with December 31st deadlines. Step 8. Purchase and place in service qualifying business equipment before year-end to take advantage of Section 179, expensing or bonus depreciation. Schedule a year-end tax planning meeting with your CPA to identify personalized strategies. Don't forget to like this video and subscribe to our channel.